Imagine this. Over 5 billion digital IDs now exist worldwide. 5 billion identities. Structured. Searchable. Connected. That's more than half of humanity. Not paper, not plastic. Digital. Now add artificial intelligence. Systems designed to analyze patterns across billions of data points in seconds. What happens when identity stops being static and starts being computed? This isn't a future concept. It's already deployed. Nearly 800 million people worldwide still lack official identification. But the other 7 billion? Most are entering digital systems. The World Bank reports 186 countries operate digital identity databases. That's infrastructure. Global infrastructure. When identity becomes standardized, AI doesn't struggle to read it. It scales. What begins as inclusion slowly becomes integration, and integration changes power. India enrolled over 1.3 billion citizens into Aadhaar, the largest biometric ID system in history. Fingerprints, iris scans, facial data, all digitized, all searchable. Over 100 billion authentications have already occurred through the system. Pause. That's not storage. That's continuous verification. And every verification is a data signal. AI thrives on signals. Europe is rolling out a digital identity wallet designed to serve over 450 million EU citizens. One identity, cross-border access, public and private services. Convenient, yes, but centralization increases visibility. When authentication becomes universal, AI can correlate behavior across banking, healthcare, travel, employment, not spying, correlating. And correlation reveals patterns humans cannot see. Biometrics now power more than 60% of digital ID systems globally. Fingerprint scans, facial recognition, iris mapping. Biometrics aren't passwords. You can't change them. Once captured, they are permanent identifiers. Now imagine AI models trained on billions of biometric confirmations. Your body becomes the key, and the key feeds the system every time you unlock a door. The global digital identity market is projected to exceed $70 billion within this decade. That's not a niche experiment. That's strategic investment. Governments, banks, tech companies. Why invest so heavily? Because identity is infrastructure, and infrastructure creates leverage. When AI connects to that infrastructure, it doesn't just verify you, it evaluates you. In the United States, identity verification is increasingly handled by private tech firms using AI risk scoring. You upload an ID, a selfie, an algorithm confirms match or no match instantly. But behind that confirmation, fraud probability models, behavioral anomaly detection, confidence scores. You don't see the score. You only see the result, access, or denial. Here's the shift. Digital ID records what you did. AI predicts what you might do. That changes everything. Loan approval systems now use machine learning. Insurance pricing uses predictive analytics. Government agencies test automated eligibility scoring. When identity meets prediction, decisions become automated, and automated decisions scale faster than human oversight ever could. Pause. Who audits the algorithm? Over 1 billion facial recognition searches are conducted every year globally. Airports, borders, city cameras. Not manually. AI compares faces in milliseconds. Accuracy rates in leading systems now exceed 99% under ideal conditions. Pause. When identification becomes instant, tracking becomes effortless. And when tracking becomes effortless, control doesn't need to be visible. China's digital infrastructure integrates identity with payment platforms used by over 900 million people. Scan, pay, authenticate. Each action tied to verified identity. Now imagine AI mapping economic behavior across that scale. Spending trends, movement patterns, social networks. Not guessing, measuring. At population level. That's not surveillance alone. That's predictive governance. In the EU, the upcoming digital identity framework aims to allow citizens to use one verified ID across banking, healthcare, education, and public services. Over 450 million people under one interoperable system. Convenient? Absolutely. But interoperability means cross-sector visibility. When systems connect, data flows. And when data flows, AI models expand. What was once siloed becomes unified. Unified data changes decision power. The World Bank estimates that digital ID systems can increase financial inclusion dramatically. In countries with strong ID infrastructure, access to banking rises significantly. Fraud drops. Leakage in welfare programs decreases. Billions saved. Pause. Efficiency is real. But efficiency also means optimization. And AI optimizes relentlessly. What else gets optimized? Access? Behavior? Citizenship itself? Over 80% of financial institutions worldwide now use AI-driven fraud detection systems. Every transaction analyzed. Every deviation flagged. Your spending rhythm is a pattern. AI learns it. If you break that pattern, travel unexpectedly, spend unusually, the system pauses you. For safety, or suspicion. But the machine doesn't know context. Only probability. Digital identity isn't just national anymore. Private companies verify billions of users through centralized identity providers, social media logins, cloud services, gig economy platforms, one identity connecting multiple ecosystems. AI doesn't care whether the data is public or private. If it's structured, it's learnable, and if it's learnable, it's influenceable. Here's the deeper question. When identity becomes digital, and AI becomes predictive, who owns your digital self? Governments? Corporations? Or the models trained on your behavior? Because data isn't just stored. It's used to train systems. And trained systems make decisions. Decisions about you, without asking you. AI credit scoring systems already operate in multiple countries, not just checking income, but behavior, phone usage patterns, transaction frequency, network reliability, alternative data, sometimes increasing inclusion, sometimes excluding silently. When identity becomes measurable, human complexity becomes a score, and scores are easier to manage than people. Over 70 countries now use some form of biometric voter registration or digital electoral ID, identity tied directly to democratic participation. AI assists in fraud detection, duplicate detection, anomaly spotting. But imagine if predictive systems began modeling political behavior, not changing votes, just predicting them. Prediction changes strategy, and strategy changes power. The global AI market is projected to exceed $1 trillion within the next decade. Digital identity systems are one of its fastest growing integration layers. Why? Because AI without verified identity is limited. But AI with identity, it understands context, economic status, location, behavior history. Context transforms raw data into influence, and influence scales globally. Cybersecurity experts warn that centralized identity databases are prime targets. Massive data breaches have already exposed billions of identity records worldwide over the past decade. Pause. When identity is centralized, a single vulnerability can affect millions. AI can defend systems, but it can also exploit patterns if compromised. Power cuts both ways. Infrastructure magnifies both safety and risk. So here we stand. Billions of digital IDs, trillions in AI investment, automated decision systems expanding into finance, healthcare, governance. This isn't dystopia, and it isn't utopia. It's architecture. Digital identity plus artificial intelligence creates something new, a world where access, opportunity, and freedom may increasingly pass through algorithms. The question isn't whether it's happening. The question is, who sets the rules? In the United States, federal agencies now deploy AI across more than 1,700 documented use cases. From fraud detection, to immigration processing, to benefits eligibility, not replacing humans entirely, augmenting them. But augmentation shifts authority. If an AI system flags risk, how often does a human override it? And when identity data feeds that system, what exactly is being evaluated? Digital identity enables something powerful, real-time authentication. But AI enables something deeper, real-time assessment. Imagine crossing a border. Your biometric confirms who you are. But behind the screen, an AI model checks travel history, purchase records, behavioral flags, clear, or secondary inspection, no accusation, just probability. Probability quietly shaping movement. Over 100 countries now use biometric data in passport systems. Facial recognition gates process millions of travelers daily. Efficient. Fast. But every automated gate is also a data checkpoint. Entry time, location, frequency. When combined over years, AI sees mobility patterns, not one trip, a lifestyle, and patterns are powerful. Digital public infrastructure is expanding rapidly in developing economies. Identity, payments, data exchange layers, designed to boost growth, reduce corruption, increase transparency. The model works. But once integrated, AI can observe entire ecosystems, economic flow, benefit distribution, consumer behavior, macro-scale visibility. Visibility is influence. Think about health. Electronic health records are now digitized in most advanced economies, linked to verified identity. AI models already analyze patient data to predict disease risk. Early detection saves lives. But predictive risk scores can also influence insurance access, employment screening, eligibility. Health becomes data. Data becomes probability. Probability becomes leverage. Facial recognition accuracy has improved dramatically over the last decade. Leading systems now perform with error rates below 1% in controlled environments. Governments cite this as progress, efficiency, security. But scale changes perception. If a system processes 10 million faces, even a 1% error means thousands misidentified. Automation magnifies outcomes, good and bad. Private tech firms increasingly act as identity intermediaries. Cloud identity platforms verify billions of logins every day. One compromised credential potentially unlocks multiple services. AI monitors anomalies constantly, login patterns, device fingerprints, location changes, invisible guardians. But guardians also log everything, and logs feed models. Financial regulators now encourage AI-driven compliance systems, anti-money laundering, fraud prevention, terror financing detection, all dependent on identity linkage. When accounts are tied to verified digital IDs, transaction networks become traceable. AI can map relationships, clusters, influence networks. That's security. But it's also visibility at unprecedented scale. Digital identity systems often promise user control, consent dashboards, data access logs, transparency portals, important safeguards. But complexity matters. How many citizens truly understand how their data trains AI systems? How many read algorithmic impact assessments? Transparency exists. Comprehension varies. An asymmetry of knowledge is power. The fusion of digital ID and AI doesn't create a dictator. It creates a system, automated, optimized, scalable. Systems don't wake up with intentions. They execute logic. If the logic prioritizes efficiency, human nuance can shrink. If the logic prioritizes risk reduction, freedom may become conditional, not revoked, just scored, and scores quietly influence outcomes. In smart cities worldwide, digital identity integrates with transport cards, mobile apps, and civic services. Tap to enter, scan to access. AI optimizes traffic flow and resource allocation. Brilliant engineering. But optimization requires tracking usage patterns, peak times, frequent routes. Behavior modeling improves infrastructure, yet it also creates behavioral maps of populations. Maps are powerful tools, in the right hands. Artificial intelligence depends on feedback loops. The more decisions it makes, the more outcomes it observes, the more refined it becomes. Now imagine those loops connected to identity data. Every approval, every denial, every flagged anomaly. The system learns from consequences and evolves, not maliciously, mathematically. Credit bureaus already compile extensive identity-linked financial histories. AI now enhances predictive scoring models, beyond debt ratios, into spending patterns, payment timing behavior, even subtle consumption signals. A missed payment once mattered, Now behavioral volatility can matter. Small fluctuations interpreted as risk. When identity is persistent, history never disappears. Some nations are experimenting with digital driver's licenses stored on smartphones. Secure, encrypted, verifiable, convenient for citizens. But smartphones also generate metadata, location history, app interactions, network signals. While licenses may remain secure, the ecosystem around them produces context. And AI thrives on context. Let's be clear. Digital identity plus AI has stopped fraud rings, reduced identity theft, accelerated emergency response, saved governments billions. These are measurable benefits. But power is rarely one-dimensional. The same system that prevents abuse could, if misused, constrain dissent. Infrastructure is neutral. Intent is not. Data localization laws are rising globally. Countries want identity data stored within borders to maintain sovereignty, to control oversight. But AI models often operate across multinational platforms. Data may stay local, algorithms may not. So where does governance truly reside? In the server or in the code? Major tech companies invest billions annually into AI infrastructure. Cloud identity services are central revenue pillars. Why? Because identity anchors digital ecosystems. Without verified users, platforms lose trust. AI strengthens verification. Verification strengthens dependency. Dependency strengthens market power. Market power influences policy. And policy shapes identity systems. Digital identity initiatives in Africa are expanding rapidly. National biometric programs aim to register millions previously undocumented. Inclusion, access to banking, access to voting, access to healthcare. Transformational progress. But leapfrogging directly into digital systems means AI integration happens from day one. There is no analog past to compare against. Only digital governance forward. Artificial intelligence models improve with scale. More users, more data, more behavioral diversity. When identity systems cover billions, AI gains population-level insight. Trends emerge. Anomalies stand out instantly. Macro prediction becomes possible. Not just forecasting weather or markets, but social patterns. Population behavior modeling changes strategy. Artificial intelligence models improve with scale. More users, more data, more behavioral diversity. When identity systems cover billions, AI gains population-level insight. Trends emerge. Anomalies stand out instantly. Macro prediction becomes possible. Not just forecasting weather or markets, but social patterns. Population behavior modeling changes strategy. Imagine protest movements analyzed in real time, not censored, just monitored. Identity-linked participation patterns mapped. Network influence scored. Predictive tools estimate turnout probabilities. Governments already analyze public data. AI simply accelerates the process. Speed changes power, because fast response can shape outcomes before momentum builds. Digital welfare systems increasingly use automated eligibility verification, income data, household composition, identity confirmation. AI flags inconsistencies, reduces fraud, improves targeting. But errors can freeze assistance instantly. Appeals take time. Automation moves faster than bureaucracy. And vulnerable populations feel that gap most sharply. Biometric identity is considered highly secure. Yet no system is invulnerable. Large-scale data breaches over the past decade exposed billions of personal records globally. Identity theft is evolving. Deepfake technology now challenges biometric verification itself. AI defense. AI attacks. It becomes an arms race, built atop identity infrastructure. Central bank digital currencies are being explored by dozens of countries. Digital money tied to verified identity, programmable transactions, traceable flows, policy tools embedded in code. Combine that with AI, and monetary systems gain predictive insight into spending behavior. Economic policy could become algorithmically responsive, powerful, but deeply structural. Digital reputation systems already exist in subtle forms. Ride-sharing ratings, seller feedback scores, professional endorsements. Fragmented, but identity unification could consolidate reputation signals. Imagine AI aggregating trust metrics across sectors: financial reliability, civic participation, professional consistency, not official social scoring, but composite risk indicators. Functionally similar. Children born today in many countries will receive digital identity credentials within their first years of life. Their entire existence, from school records to healthcare to employment, will be natively digital. AI will never adapt to them. It will grow alongside them. For that generation, algorithmic assessment may feel normal, not intrusive. Normalization shifts perception of power. Ethical AI frameworks are emerging worldwide. Transparency requirements, audit mandates, bias testing, safeguards matter. They slow misuse. But enforcement varies. Oversight bodies often lack technical depth compared to developers. Regulation moves carefully. Technology scales rapidly. The asymmetry creates tension, and tension defines the next decade. Some experts argue that decentralized identity, self-sovereign models, could rebalance control. Users hold credentials, share selectively, minimize centralized storage. Promising. But adoption remains limited. Centralized systems scale faster, because simplicity attracts governments, and governments move markets. So is digital ID plus AI equal to total control? Not automatically, not inevitably, but it creates capability. Capability to monitor at scale, capability to predict behavior, capability to automate decisions. Capability does not equal destiny, but it changes the boundaries of possibility, and possibility reshapes power. We are not entering a dystopia. We are entering an era of digital architecture, identity as infrastructure, AI as intelligence layer. Together, they redefine governance, economics, and personal autonomy. The future will not be decided by the technology alone. It will be shaped by policy, by design, by public awareness. The system is being built. The real question is, who gets to shape it?